can give you some generic advice, but what is your exact question? So I know I'm catering to your question. Is it, should you invest in Baltimore?
Yes. Should I invest in Baltimore, and what are the unknowns? And I mean, just to learn from you, just to follow your steps, like how did you do it? What was the unknowns and how did you figure it out? And what do you offer now since you have already gone way ahead of me? Like what can you
Yeah, let's not say way.
transfer?
Let's not. We're all in different journeys. So,
Yeah.
and know that you're in probably the top 1% having 3 rental properties and taking action. That's huge right there, right off the bat. The way I started is very similar to what you're doing. Every 1 year or 2 years, purchasing a property, and you'll hear a lot of people really be like, "Oh, you got to scale up. You got to have all these units." And as a father first, as we all should be, scaling up a lot of units causes a lot of stress. Growth
Definitely.
causes a lot of stress, and that will reverberate into your family regardless. Anything. If you're stressed at your work, that's going to go into
Bring
your
it
family.
on. Yeah.
Yeah. And so Baltimore has treated me well. And a lot of times I'll get the question of, or maybe the statement of, I should invest in Baltimore because you are investing in Baltimore, Dave. And Baltimore has a lot of challenges. It's like any major metropolitan city, rough city, like a Detroit or a Chicago. And so it's a tougher place to invest, and it's going to cause more stress than investing in a Columbia. That was awesome, by the way, that you invested in Columbia. I think Columbia is awesome. I think it's going to continue to appreciate. I love the location. Do these properties cash flow? Do you just purchase them in cash? Are you leveraged on them? What's going on there?
So no, I didn't pay cash. They do cash flow, especially the townhouse. It cash flows well. The one in Alexandria, it does not. It didn't appreciate much because it's a condo, and then there was a roof maintenance going on, so they jacked up the HOA, the condo fee. So that ate all my cash flow.
So you have a good learning lesson right here.
Mhm.
Before we even address Baltimore, I don't love condos. Try to stay away from condos, and that's because the condo fee usually goes up. It's very rare that it doesn't go up, and
Yeah.
people look at their total expenses. And so if the condo fee goes up, prices are going to come down or not go up compared to other things where maybe it's an HOA and it only goes up $5. If your condo fee goes up $100, well, people, they calculate that in their all-in expense cost. And so I don't have the exact statistics, but condos in general just don't appreciate like townhouses, like you're realizing. And then when that condo fee goes up, guess what happens? Your cash flow goes down. And so I think that's a good learning lesson right there. Townhouses were always bread and butter for me. So I think
Yeah.
you have something there. I think investing in better areas over worse areas is you have a great 9 to 5. I'm sure you make plus 3 figures. And so that's awesome. I think you're doing all the right things.
Another thing I didn't tell you, so I have also a hobby of this DIY working on projects. So the
Mhm.
condo, I was single back then, or I was dating, but had a lot of time. So I renovated everything top to bottom, kitchen, bathroom, floors, painted everything, and it was marvelous. So getting a tenant is very easy for me. I check the market, and of course, I give them quality products, and in return, you want someone responsible who has, job, good credits, and everything. So that's what I've been doing. And the same thing I did to the townhouse. It was a little bit of beat up property. It was rental for 10 years, carpets everywhere, dogs, and the smell. And it was so. I said, okay, this is a good opportunity. And 2020, during the slowdown with work being a little bit down, I invested my time, did everything top to bottom. I can show you some photos and everything if you want.
Yeah, no, I believe you. That's awesome.
Yeah, yeah.
And
So it is renting like this.
you're realizing that value add strategy, which is another amazing strategy.
Exactly.
And so,
Which I cannot do anymore now because, family, kids, and everything. At some point, I
yeah,
have to put down the hammer.
yeah, no.
Yeah.
As you scale, I mean, unless you really love it and that's your passion, I
Yeah.
mean, it's better off in somebody else's hands because,
Mhm.
especially somebody that's really specialized. I don't have a
Yeah.
call right after us, so I have a call at 12:30 now, so
Oh,
we can go.
okay.
We can go a little bit longer. You get some extra bonus time. But I think right now you're doing the right things. I would not. I'd look for properties in good locations, I would not start purchasing in inner city Baltimore, even though the price point's still lower. Go for location, still look for cash flow. You don't want to purchase condos that don't have cash flow. They're not going to appreciate as much. The icing on the cake is the appreciation. I don't even want to say the icing on the cake. I just had a conversation with another large investor in Philadelphia the other day. And she was like, everybody says the icing on the cake's appreciation. She's like, that's actually where the wealth's built. And I was like, you're 100% right. I'm going to release a video on Friday about how much money we made on a property in Woodbridge, Virginia.
Okay.
We made $265,000 in 11 years. And it was like very little maintenance. It was very little I kept the kitchen. The kitchen was the exact same when I put it to sale. I had to change out the floors, but there wasn't and I think that's the best wealth building strategy at the low. It depends what you're optimizing for. So if you're optimizing for low stress and, hey, I just want this in the background, you already have yourself taken care of with your 9 to 5. Just buy properties every 2 years in good areas that are going to rent quickly. So you don't have to worry about that. You don't have that long. If you purchase in Baltimore City, sometimes you have like a 3 or a 6 month lease up time, which can be rough. And especially if you're purchasing in Northern Virginia, this is like great jobs. People have high salaries, things rent really quickly. I would start visiting the idea of like the deployment of your capital. I think there's a really good video that I have. It's me analyzing a Chris Lopez video from Bigger Pockets about return on equity. And I'll send it to you after. But I think that is a good one to understand how much your money in those properties is making. And if it's not making money, then maybe it's appropriate to sell, even if you're selling for like a slight loss. I think that's okay. And redeploying that capital into a different property that actually makes money. Because I definitely don't like negative cash flow properties. And you are playing a speculator's game, even though it's in a great market. But I have a very high feeling that we're just going to have a lull of property appreciation for a while, for 3 years. I could be wrong. I could 100% be wrong. And it's all speculation. So appreciation is always going to be speculative. And it's hard to tell how high appreciation is going to go, but cash flow is not. And it's really hard for rents to go from like $2,000 to $1,500. It just doesn't really happen. Rents kind of go and they're very sticky.
Okay.
So if you always are basing like, okay, this cash flows, and I'd say try to find things, even if you're doing a bigger down payment, that are going to cash flow $300, $400. Even if you get higher than that, it just is a more conservative. So you don't really have to think about things. And if anything goes wrong, hey, you got to replace a used washer or dryer. It's just like, okay, I just don't make money this month on the property, which you don't necessarily need. They're just like this retirement strategy, I would assume, for you. If you do it like I did, and it's a full-time, like you're not working a 9 to 5 and having a 50 unit portfolio, or maybe you are, but it's going to be grossly inefficient because you're going to have property managers that are doing the stuff, and you're not going to be able to really be hands-on. And so you're going to be losing a lot of money in the long run. So I'd say go with your strategy, go with townhouses, go in the better areas that are fringe. Columbia definitely has appreciated a ton, but there's some really great areas in Maryland, suburbs of Baltimore, that are still affordable. And they're especially from where you live, if you can buy a nice single family house for $250,000, it's definitely possible that it goes up to $350,000, $400,000 pretty easily, as long as it's not in a really high taxed area. So you'll see places in the nice places in Baltimore, the taxes are crazy. So it's like a $200,000 townhouse and it's taxed at like 15 grand. And you're like, this is great. And it's similar. If you think of the similar strategy that we just talked about with the condo fees going way high, if you're investing in these areas that have ridiculous taxes, it's always going to throttle your appreciation. And so I think what you're doing is the right strategy. I mean, and then you can kind of keep the same team I also think if you try to concentrate a little bit, it's going to be less stressful. So if you keep your properties semi-close, I mean, they don't have to be ridiculously close, but if you start investing like far away, then
It
you're going to
gets
have
now the Virginia is getting a little bit challenging. I fix a lot of stuff myself, but now the drive is an hour and a half. So I've been outsourcing, and they just come and do a small stuff and charge you like 750, 800 just to fix the AC, and those are very important for the tenants. So it is getting tough. The only reason I want to keep the Virginia is the location is becoming very popular. A lot of apartment buildings are building. It's on Richmond Highway in Huntington area. I don't know if you know it.
very
So
familiar.
yeah, very popular with Amazon being close by and all of that. It is going to be. I mean, there is a potential, and there is even be the couple of blocks towards 495. Investors have been buying, clearing out, and then building big buildings. So there's also that potential in the future, which I don't want to miss out. I'm not saying it will happen, but you don't want to be the one in 5, 10 years saying, "Oh my God, I should have kept it." So, and of
Yeah.
course, even if investor comes, let's say the value is 200, they're not gonna give you $1 million. It's like a couple of 10, 50,000 more. So all of that, I do have. Okay, let's just have $100 cash flow and keep it for now. But like you said, if a condo fee goes up every year, and if something messes up, then the entire cash flow through the out is just going out of the window at
Yeah.
once.
I mean, you can also look at places like Fort Washington, PG County. I did really well there. It's all about the buy and making sure you have
Yeah.
the cash flow. I still have one property in Fort Washington that I'll sell, and it's going to be, I think, another big, huge key. And I have to go in like 2 minutes for the next call. But I think another big key is the time. You just need time in these properties that are in good locations. Make sure they cash flow a little bit so they're not stressing you out.
Yeah.
But that's what I've noticed. I just looked at it earlier because I was going to sell it. And then my tenant was like, can you, like, my daughter's not done. I mean, this is the human element. My daughter's not done with high school. Even though my lease is up, can we just do like another 8 months? I hope everything doesn't fall apart in 8 months, like the HVAC.
Yeah.
And it was a
Yeah.
property that I purchased in 2014. So what is that? It's 10 years.
Mhm.
I haven't done a ton there. I mean, that's holding. It's not making. Again, I'll go back to the video on return on equity. I think that's an important concept for you to learn.
Yeah.
So I have a lot of money tied up in that Fort Washington property, and it's probably I think it's making me like 4%. And I'm like, man, I really got to move this money somewhere else because it's not building wealth as it could be. So I think that's a really good concept for you to understand and then determine, hey, do I want to keep this? Should I move it? But hopefully that helps a little bit.
Yeah.
But congrats, 3 properties. Just keep doing what you're doing. I just stick with townhouses.
Okay. Sounds good.
All right. It was nice meeting you. Appreciate it.
Thank you so much. Thank you for your time.